Nvidia stock is down roughly 1.4% after reporting earnings. Now, while Wall Street might not be impressed by those results, I think Nvidia had a very, very solid quarter. Now, one of the things that I think was super amazing is Nvidia's free cash flow for this fiscal year was roughly $60.7 billion. This is actually more free cash flow than Amazon. Amazon did 32 billion and even more free cash flow than Meta Platforms, which was 54 billion. It's only about 8 billion short from beating Microsoft in free cash flow. And I'm going to make this wild, wild prediction that by the end of this fiscal year, Nvidia is going to be either the #1 or #2 free cash flow machine in the Max 7. So on today's episode, what I want to do is kind of take a closer look at Nvidia's most recent earnings. What are the things I really enjoyed from the earnings call? This is going to be the best place you're going to find any Nvidia and AI semiconductor updates. But if you do want to get my free daily semiconductor newsletter, check out whatthechiphappened.com and also check out my special offer at fool.com/Jose.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right. So like I mentioned, Nvidia is a free cash flow monster, $60 billion in free cash flow this year. And like I mentioned, I believe by the end of this upcoming fiscal year, so in about a year from now, Nvidia is going to be a bigger free cash flow machine than any other player. If not, they are going to be #2. Now, I kind of want to just share my overall thoughts so you guys can see that I do follow this company on a very, very strict basis. So I was pretty close with revenue expectations. So in my previous videos, I kind of mentioned that Nvidia was going to give us about $38.5 to $39.5 billion in forms of revenue guidance. And we got closer to this 39.5 in my upper ring. And then for guidance, I expected guidance to be somewhere between $42 to $43 billion. And this is exactly what we got as well, $43 billion. So I think these numbers were a little bit better than what the average consensus in analysts thought. So maybe I got lucky here and did better than some of these analysts' expectations. Now, the first kind of topic I want to talk about is Blackwell. And Blackwell obviously is the big topic at hand, as this is the product that's ramping up right now and that is doing amazing for things like total cost of ownership with this new generation of large language models that's really crucial for kind of the time scale thinking. So from Nvidia, we saw that in Q4, Blackwell sales exceeded their expectations and they delivered $11 billion in Blackwell revenue. And this is their fastest product ramp in company history. Now, this is insane because $11 billion in one quarter for a product that is in ramp phase. It's not in full production. It is in ramp phase. It is insane. And just to kind of put this into perspective, not to throw any shots at AMD, because AMD is another position that I own, but AMD did $5 billion in a year with the full ramp product. This company did $11 billion in a quarter during ramp phase. Now, I want to say Nvidia is a beast. They are definitely ahead of the game. So right now, one thing that we are seeing with DeepSeek R1, with OpenAI O3 and O1, and with Grok 3 is this new time test scaling, which is kind of long thinking reasoning on AI. And the crazy thing about this is this could require about 100 times more compute per task compared to one-shot inference. Now, somehow, NVIDIA was ahead of the curve in this new architecture. Blackwell was perfectly architectured for reasoning AI inference. They mentioned that it's about 25 times higher token throughput and 20 times lower the cost versus Hopper 100. So somehow NVIDIA is just striking gold and gold and gold and getting hit with lady luck all this time that Blackwell came out at the perfect time because somehow NVIDIA knew that inference test time scaling was coming. And many believe that NVIDIA has no real moat in the inference space, but this ability of Blackwell being such a great solution for inference is all the moat that they need. Now, Blackwell has great demand for inference, and many of the early GB200 deployments are marked for inference, a first for a new architecture. And the great thing is Blackwell addresses the entire AI market from pre-training, post-training to inference. So this is pretty insane that normally we think of NVIDIA as kind of the training player. And while the training is definitely still intact, most of the new GB200s, because it has this amazing token throughput for inference, are being deployed first for inference. And that's great because this is eventually NVIDIA wants AI to be running 24/7, and being a big player in the inference space will allow them to continue to grow. Now, one thing that all these things I find interesting, so I don't know how many times I can say one thing I found interesting, but another thing is NVIDIA mentioned that they launched a 100,000 GB200 cluster based incidence with NVL link switch and quantum to InfiniBand. Now, I don't know if I missed it, but I did not see who this 100,000 GB200 cluster is. Regardless, that is insane. The only two players that I think it would be would either be Grok XAI or part of the Stargate program for OpenAI. But this massive compute is going to be amazing for both inference and training, and to already have kind of the first cluster of 100,000 GPUs is amazing. Now, I want to kind of jump really quick into enterprise revenue. They mentioned that enterprise revenue increased nearly 2 times versus same time last year, as we are kind of seeing acceleration for demand pick up. And this is great, right? You want to see enterprise really move into the AI space, as they are going to be the ones that are going to be pushing even more solutions to their own customers or to their own workforce. So more demand means more software solutions, which is going to continue to increase the computation need. Now, they also talk about the auto robotics market. So NVIDIA's automotive vertical revenue is expected to grow to approximately $5 billion this fiscal year. So we are expecting kind of this growth market here. The other things in the robotics space or the automotive space, they mentioned that Cosmo is a physical AI model that's going to revolutionize robotics, and that robotic companies and automotive companies are already first to adopt this platform. So I've said it in these videos plenty of times. I do believe the next push in AI is going to be in physical AI, and the automotive and robotics market is going to be a key player. Now, in forms of networking, NVIDIA is doing really good with kind of improving their networking solutions. First, they mentioned that the first Stargate data centers will use Spectrum X. And Cisco yesterday announced that they're integrating Spectrum X into their networking portfolio to help enterprises build AI infrastructure. And Cisco will bring NVIDIA internet to every industry. So NVIDIA is definitely expanding in the networking space. They did give guidance that, hey, look, the networking revenue will pick up in the upcoming quarters. Now, gaming is a very small portion of this company's total revenue, but I believe it's still somewhat important. Unfortunately, this did see a 22% sequential decrease and an 11% year-over-year decrease. The main reason is they were impacted by supply constraints, but they do expect strong sequential growth in Q1 as supply increases. Now, I mentioned I think this is still somewhat important because in forms of $2.5 billion in revenue for a company that did about 39, that's closer to like 7% of total revenue. And this gaming market, right, if they had an extra $0.5 billion here, even an extra or extra 1 billion, this would have been NVIDIA beating expectations dramatically on top level numbers. So the gaming, while it is much smaller than it was before, this revenue could help NVIDIA beat expectations in the future. Now, I want to say one of the biggest red flags for NVIDIA right now, and one of the worries that I think investors are still trying to digest, is margins. So the company mentions as Blackwell ramps, they do expect gross margins to be in the low 70s. Later, they mentioned that the main reason they expect low 70s is because they're really focusing on expediting the manufacturing of the Blackwell systems to meet strong customer demand. Now, They do mention as the move on to the next Blackwell, the Blackwell Ultra, or kind of go into full production, this margins is expected to improve to the mid 70s later this fiscal year. And the main thing is going from NVIDIA's Hopper to Blackwell was a complete architecture change. So there were a lot of changes, a lot of things that they needed to tweak out with kind of the supply chain market. But going from Blackwell to Blackwell Ultra is not meant much changes happening to the overall supply chain market. So that's why later this year, we do kind of expect mid 70s margins. Some people might be wondering, hey, Jose, are margins going to drop again when we go to the Blackwell Ultra? Because they are in similar architectures, the answer as of now is no. Now, in forms of guidance, they're giving revenue of $43 billion. And unfortunately for GAAP, gross margins is roughly 70.6 or 71 on guidance. And I do think this is going to be the biggest red flags that we saw from the company. But overall, NVIDIA is just really trying to expedite that manufacturing of the Blackwell system. Now, this is a question that I personally had is like, why do they really care of expediting it so much? And kind of miss out on margins. And as we're going to see later on, NVIDIA did have the delay in the Blackwell platform, and they're still on track with their other platforms. So they want to sell as many of these chips before they go into the Blackwell Ultra, I'm going to guess is my guess. Now, for future growth, there was an analyst that kind of asked Jensen, why are they still bullish in the long term of things? And Jensen mentioned, hey, look, they have fairly good line of sight of amount of capital investments into data centers and the build outs that are happening throughout the year. And they have, of course, forecasts and plans with their top partners already. Now, the also other thing is there's so much innovation happening in the AI market from either startups or big players, new opportunities rising, and all these breakthroughs in AI can push even more spending in the AI space. And it's not just one revolution happening. There's so many happening that the chance of one of them being successful in the near future could be really, really high. Now, another kind of question was, is the yearly cadence still strong? So Jensen mentions, yes, even the Blackwell Ultra is still on track for the second half of this year. Unfortunately, the first Blackwell did have hiccups that probably caused a couple of months, but they're fully recovered now. Even though there was a delay, it does not stop the next train. The next train is on an annual rhythm, and Blackwell Ultra with new networking, new memories, and of course, new processors and all that is coming online. And this is what you like to see, right? NVIDIA says, you know what? We released our product, unfortunately, because of our own fault later. We're not going to push our future products any further down. We're going to keep on track. And this is the mistake we got to own. But regardless, we're still going to be to win. So like I mentioned, the time between Blackwell and Blackwell Ultra is a lot easier because going from a different architecture is harder. Like I mentioned, going from Hopper to Blackwell is hard, but going from Blackwell to Blackwell Ultra, since it's almost a slot right in system, it's a lot easier. And after that, they've already worked with their partners and have already mentioned the Vera Rubin, and all their partners are getting up to speed on the transition of that. So they are preparing for that transition, and we will hear a lot more in GTC, which is just a few weeks away. Now, I think this might be the last question I have. Yep. And hopefully, if you guys enjoyed the episode so far, make sure to hit the thumbs up. Make sure to hit the subscribe button, as this is definitely the best place you're going to get any NVIDIA updates that make sense and that provide maybe some more information and some more edge than any other place right now. So in forms of the ASIC market, for those that are not familiar, ASIC is when a big tech player develops their own AI chip. Now, Jensen is very competitive and he says, yeah, I mean, that's happening. But at the end of the day, there are a lot of chips that get built. But when it comes to a business decision, a business decision has to be made. And that business decision is about deploying a new engine, a new processor in a limited amount of AI factory size, in power, and in time. So no matter how much money Meta or all these other big tech players develop their own AI chips, there's only limited amount of real estate, limited amount of power capacity. So those companies need to make sure and sense, hey, look, it might be cheaper to make my own chips and run this data center here, but which one's going to make me more revenue in the long term of things? Is Nvidia just that much better? And Nvidia believes that they are. So the ASIC market is there, but Nvidia believes that because of the constraints in a lot of things in this industry, they have to pick the best, and the best at the end of the day is Nvidia. So this is a competitive player. There might have been some things I might have not talked about, but the DeepSeek drama, not something to worry about, in my opinion. We've heard from NVIDIA that this is actually very bullish from them, and the Blackwell architecture actually works really well with the DeepSeek model and all these time to thinking skill models as well. They do kind of talk a little bit about maybe more export restrictions and tariffs, but they mentioned that they really can't plan anything of that right now because there's no concrete data. But I believe that would be another kind of bearish case for investors right now, as that uncertainty of tariffs and that uncertainty of more export restrictions is creating some uncertainties to the stock. Regardless, I think tomorrow we are going to see a lot of analysts increase their price targets, and I wouldn't be shocked if we had a nice green day for Nvidia. Those are my thoughts. Like always, I'm a long-term investor. Take care and see you all next time.